Welcome. You're listening to The Best of Investing on Talk 910, the show where we present valuable information about real estate, the financial markets, and other economic business of the day. I'm your host, Edward Brown, and I'm proud to have as my co-host Mark Hahn of Pacific Private Money, one of California's fastest growing mortgage investment firms. Our phone number is 888-912-1190. Now, write that number down because you're going to use it to answer the trivia questions for 3 vacations given away during each commercial break. Now, the vacations are not sponsored by the radio station, but by Lighthouse Resort and Marina, which is located 1 hour northeast of San Francisco. Check them out at lighthouseresortandmarina.com. The vacations are free. Their only request is a $75 cleaning fee to cover the housekeeping expenses. Today's trivia theme is the color red. Color red.
All right.
Our website is bestofinvesting.com. We're also on television, Comcast Channel 26 and AT&T Channel 99, Saturdays at noon and Sundays at 6 p.m. So you can always set your DVR to record us in case you miss us. All right, Mark, get right into it. Got a lot of good stuff to talk about today.
Yeah, so I spent this past week working on the March distribution calculations and investor shareholder letter for our Pacific Private Money Fund. For those of you who are new listeners, I have a company called Pacific Private Money. We're based right here in the Bay Area. We serve two types of clients. We are an alternative source for financing. We're a Plan B when Plan A fails. Of course, Plan A is going to the banks and getting one of those 4% loans. But when that fails, and it fails for a number of people, both consumers and real estate investors don't qualify these days under the Dodd-Frank regulations for those juicy low-rate loans, and so they turn to Plan B, which is private money. And Pacific Private Money has been serving the local Bay Area source for alternative financing now for going on 8 years. We've done nearly 1,000 loans, and that's one side of the equation. The other side of the equation is those clients who provide their capital, those investors, the people that are earning 8% or more on their money that many of you have heard about on our commercials. In fact, we've been running some additional commercials this month, just started last week.
With Gil Gross.
With Gil Gross, right. So we're getting lots of calls. Again, people are very, very curious about how they can earn 8% and what is it all about, and tell me about the safety and security features. And we're going to get into a little bit of that at this show. So hold on, and we'll talk about the benefits of mortgage investing, as we like to call it. So anyway, I'm working on the letter, and we've almost have 2 years of performance under this fund that we created. Now, when we started doing privately funded real estate loans back in 2008, what we were doing was really being a matchmaker between people who needed money that would come to us with a loan application, and then people who had money, people with savings. Many of them in the very beginning, my very first investors were all retired real estate professionals who really liked to invest in real estate secured notes.
So you brokered the deal.
Yeah, I was brokering. I was acting as basically a broker. Yeah, money dating, says some people.
Money dating.
Short-term loans between people who need money and people who have money. Yeah, money dating, right? You know, my own little version of eHarmony.
Yeah, exactly.
And so for the first 4 years, that's all we really did was be a matchmaker between these two. And our loans really, for the most part, to the borrower look just like a bank loan, with the one exception: it's more expensive, unfortunately. But that's,
but Nordstrom's is more expensive than JCPenney's.
Well, that's true. So we try to make up for it by being very friendly, good service. We're very fast, and it's mostly pain-free to borrow money privately from a reputable source like Pacific Private Money. And that makes up a little bit for the fact that it is more expensive. So the average loan rate that we make today is about 10%. It was actually a little bit more expensive a couple of years ago, but the growing popularity of mortgage investing has actually driven the yields down a little bit, as the free market will do, right? So anyway, the fund for March is continuing to produce exactly within our target range. We've been producing yields to our shareholders in the low 8% range consistently. We do not use leverage in our fund, so the fund is a pure yield. It's the note rates earned on those notes that the fund makes, minus the fees and charges that are customary.
Yeah, but that's a net yield to the clients.
It's a net
And that's
yield
what
to
people
client.
need to remember, because, when they're looking at alternative or any kind of investment, they might hear a gross yield,
Mhm.
but when you start going, slice away all the various commissions or this or that, as I understand, there's no commission to get into your investment.
Very good point. That's right. There's no load, as they call it, or commission going in, and no load or commission going out. So it is a very pure yield. So we earn as we generate the yields. We pull a little bit off the top. We meaning the company, Pacific Private Money, earns a manager's fee, but we are producing a clean net yield in the low eights, and so putting the investor report together and sending that out. And so our investors are growing, and in fact, many of them have started out with an investment to open up an account, and then they add money over time as they see, hey, this is the real deal. In fact, got a phone call from somebody last week and said, so I heard that no one's ever lost money with you, and you may have heard that. Sometimes we've said that on past shows, and it is true. And in fact, not only, it's actually more than that. Not only has no one lost money through Pacific Private Money, and this is since 2008. So I know that a lot of people who lost money lost it when the market shifted and turned abruptly in 2006 and 7 and 8. We actually formed our company after or right after the crash. But getting back to the no one's lost money, it's no one's even lost the interest they were promised. So every single investor in our nearly 1,000 loans not only has received their full principal back, but they also received all of the interest that they bargained for.
Well, in fact, in some cases, they actually got more.
Well, that's right.
Give an example of how someone could actually get more than what they were.
Right. So let's talk about the one we were just talking about before we started the show. Is and this was a few years back, and this has only happened once. So we get a loan application from a person who owns a very nice home this was in East Contra Costa County in Brentwood, and it was a cash out refinance, first position loan. We had an appraisal done, and we agreed to make him a loan that was equal to 60% of the appraised value.
Okay.
And there was a small loan on it before, so he pulled out a couple $100,000. I don't know the exact numbers anymore, since it's been a few years. But what was noteworthy is that the guy never made a payment on the loan.
Day one.
From day one. So we make him a 24-month loan, I think was the term. He never made a payment on it because shortly after we closed the loan, he was indicted and then jailed shortly thereafter for some fraud that he had done in another business. So of course we were concerned. Obviously we wanted to make sure that nothing would impact our loan, and of course it didn't, because we had done everything through title and escrow. There was title insurance. He had the right to encumber the property, and our bank loan had a senior priority regardless of what his creditors were going to pursue. But the fact that he didn't make a loan payment meant that my investor in that note got 2 additional bonuses. So the note rate originally was 10%.
Okay.
Now, we build into our notes what's called a default rate of interest. So if the note goes into default, we bump that rate up. And in this case, it was a premium of 4 percentage points. The note rate went from 10 to 14%. And in addition to that, he had to pay a 10% late fee for each of the months that he didn't, that he didn't pay. And so we immediately filed foreclosure. It never actually went to foreclosure because it was paid off. The property was sold by the people that were taking over his business affairs, and paid our lender off prior to it actually going to foreclosure. But the note was outstanding for 6 months, and in that 6-month period, we calculated that our investor got an internal rate of return of over 16% as a result of the default rate and the late charges.
So instead of getting a 10% rate, he got a deferred rate
Right.
for 6 months, basically, but 16%. Wow.
Right. So we've only had 2 properties actually go to foreclosure. Those nearly 1,000. But when we get back, we'll talk a little bit about how you could actually benefit when there's a stutter step in the process.
Well, in fact, I'm going to guess that one of the major reasons that there's very little foreclosure is because the loan-to-value loans that you're doing are so low, nobody wants to lose their property
That's
for
exactly
a 60% loan.
Yeah.
It's not as much the fact that, the economy's doing okay. That is a part of it, though. Okay, we're going to cut to our first commercial break here, and here's the trivia question. Again, the theme is the color red. What is the meaning or significance of the color red in the American flag? The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Call 888-912-1190. That's 888-912-1190 to answer this question. What is the meaning or significance of the color red in the American flag? All right, 888-912-1190. Make sure to include your name and your email address. Speak slowly. Spell out your email one letter at a time. Don't touch that dial. The best of investing. We'll be right back.
Let's go a little bit longer on that, so in the next segment we'll talk about that a little bit more.
Well, why can't I find it? It's because it's here.
You're flashy.
Yeah.
That looks like the same one you've had for like years.
You know what? It is. And what I do is I'll erase like months.
So you can get huge ones now. I got one the other day that was 128 gigabytes.
On
just
what?
Yeah,
Really?
Yeah, the 128 now is the sweet spot. Yeah, it's gone from 32 to 64 to 128. It doubles each time.
So my 240K is not very good, huh?
Is that like a 2 gigabyte or 4 gigabyte?
This one actually is. I
8.
think this one's 8.
Yeah, 'cause it went 2, 4, 8, 16, then 32, 64, now 128.
Yeah.
It's just been amazing.
And still for the size, it's amazing.
Yeah, on a 128 gig, you can have like over a dozen full-length HD movies
Really?
and just watch them. Yeah, bring it on vacation, and you don't need like
That's what I'm
Comcast
wondering.
cable.
I've got, I brought this little Chromebook thing, and I'm trying to figure out, like, the Best Buy has this thing you can stick in there, but it's like,
Yeah.
why would I need it for Netflix or something? Why wouldn't I just go online and stream a video if I wanted?
I don't know. I guess there are some services I've seen those where this thing is actually like the receiver unit for streaming online.
And that's what I don't understand. I have to go to Best Buy.
Yeah, Netflix is.
Yeah, so Sarah and I are going to go to.
I think it's an alternative to Netflix.
Oh, okay. Here we go. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hunt of Pacific Private Money. When we cut to the first commercial break, we asked this trivia question. Again, the theme is the color red. What is the meaning or significance of the color red in the American flag?
I've actually never heard that question, but I'm just going to pose a guess that it's maybe representing the blood of fallen
See, that's what I
heroes.
would have thought too. Okay, so here it is. Hardiness and valor. White stands for purity and innocence, and blue stands for vigilance, perseverance, and justice.
That's pretty cool.
I thought that was pretty cool. Okay, and actually, let me remind the listeners. Last week we had a special trivia contest where the winner was going to get I tell you what. You know what? I'm going to cover that next time. With the trivia contest with the question and the answer. I want to get back to what we were
Keep
talking
them in
about.
suspenders.
Keep them in suspenders, exactly. Let's go back to what we were talking about, how people can actually earn more.
So last segment we were talking about mortgage investing, and at Pacific Private Money we work with private individuals who make their capital available to us. They invest in real estate secured notes, and we didn't say in the last segment is there's 2 ways you can actually participate, 2 primary ways to participate in mortgage investing. One is to invest in a mortgage pool fund, which we have at Pacific Private Money. Another one is to invest in individual notes. Sometimes that's called trust deed investing, because in California mortgages are actually called trust deeds and not mortgages. Slightly different product. And we do both at Pacific. We work with individual investors who prefer to invest in individual notes, and we work with investors who prefer a more passive route to invest in our mortgage pool fund. And so what we were talking about at the end of the last segment was the fact that in our nearly 1,000 loans, only 2 have gone to foreclosure. No one's lost any money. In fact, everyone has made all of the interest they were promised on every note we've originated. And one of the ways that sometimes you get even a bonus, if 8 or 9 or 10% wasn't good enough for your troubles, when a borrower gets in trouble and goes into default. Now that doesn't necessarily mean you're going to foreclose on the property just because you finally notice a default, as we know now, because a lot of people are living in homes right now not paying mortgages or rent, and their property is, quote, in default. but they're not really facing foreclosure.
Well, also you can file a notice of default, if
Yeah.
they haven't paid, let's say, for 31 days as an example.
Well, that's exactly right, and oftentimes we will. As soon as they go 30, and definitely over 60 days, we will, unless there's a good story and we have a reason to believe they're going to get current, we will go ahead and file on behalf of our note investor a notice of default. And oftentimes what will happen at that point is the interest rate now goes up. Because
Yep.
again, in the contract that we write with them, a promissory note is a contract to pay. And in that contract, we have the note rate, let's just say it's 10% for the borrower. And if we want them to pay.
Well, here, let me just add this one thing. It's, the borrowers, they really do understand. This isn't just Uncle Fred lending them money where it's like, well, let's pay you back whenever. I mean, it's actually more serious with you than it is with a typical bank in a lot of
It
cases.
is more serious, and it's more serious because we are lending out the savings of private individuals. This is part of their life savings. They've decided to invest a portion of their savings into these alternative investments, these higher yielding investments that we believe have a lot of safety and security features. And one of the safety and security features we build in is that our contracts are tough. We want to help our borrower. We want to get him the money he needs for whatever the situation is. And a lot of them are using it for a business purpose. They're buying, fixing, and flipping properties. That's half of the loans we do. So, but we want to make it tough on them to not keep their promise. And so, pay your monthly payment on time, or
We're not a nonprofit.
or we're going to hit you in. We have a 10-day grace period, not a 15-day. We have a 10% penalty, not a 4% or 6%, and we have the default rate. So we really want to make it ugly for them to break their promise. We want them to reform.
I like to call it gentle handcuffs. Because it's basically
As opposed to the furry kind of handcuffs.
yeah, that's a topic for another show. But yeah, no. But the reason I like to call it that way is because it's like, look, we're nice people, but we're really serious. We want you to pay.
Yeah.
We're not going to send Guido out to break your legs, but it's going to be it'll sting if you don't pay.
Yeah, that's exactly right. And so, stuff happens, right? And a borrower goes into default. So we may or may not exercise the default rate because not everyone automatically does that. But there are some lenders that look, they've been doing this for a while and they take a tough position.
But at least it's their option.
Right, it's their option, right?
So
It's their option to exercise the default rate and charge the late payment. So we make it very compelling for the borrower to pay. And the other thing that you mentioned at the end of the last segment is that we're not making these high LTV loans. We almost never go higher than 70% loan to value. Private money, also known as hard money, is more conservative in many ways than bank financing.
Sure, banks sometimes will do 80, 90%.
Right, right. That's exactly right. They're willing to. They underwrite the borrower more closely, but they'll lend very high on the value of the property. Where we do the opposite. We look at the property and we want to maintain what we believe is an adequate, healthy, protective equity is what we call the difference between our loan amount and the market value.
The reason I like that more is because you're getting kind of a double bonus there because you're covering yourself two ways. Because sometimes the property can go down in value,
Absolutely.
but you still have a good borrower who continues to pay.
That's right.
But if you lend 80 or 90%, you've pretty much wiped out the fact that if the property goes down in value, you're not going to gain there. But you can always, you personally can always go after the borrower.
Mm-hmm.
You can always file judicial foreclosure unless it's a personal.
You can always
residence.
elect to that.
Yeah, you can elect to do that. On investment property, and the problem with doing like the way the banks do it, at 80 or 90%, is people lose their job, they get divorced, they get into a car accident, and then they're really stuck.
Well, and that's, I would not want to have a high percentage rate note with a high loan to value on a property. And there are companies out there that are originating these types of loans, and they're promising higher yields. So when you start seeing people promising 12, 13, 14%, and there are companies in California that are promoting those, the only way they can produce those kind of yields, because it's a competitive marketplace, means they have to be doing a lot of seconds or super high percentage equity joint venture type loans that are risky by
And all it
nature.
takes is a couple of really bad ones to
Right.
wipe out all that.
Now, talking about the borrowers again, it's not that we don't underwrite the borrower. We absolutely do. We underwrite the property first, And then second, we look at the borrower. We pull credit, we do a background check, we look for criminal activity, we obviously we do a Google search. And and we still collect all of that information, just not as harshly as the bank does. And I'm recently gone through a conventional mortgage applications situation, so I know that it's just the questions never end. But in our version, I mean, it used to be called hard money because it was asset based. You looked at the asset. You didn't really care about the borrower as long as someone can show up and execute the loan documents. That was fine. Well, we don't do that anymore. We actually look very, very closely at the borrower. In fact, with all the new regulations, it really it's not it's just not good business practice.
So you are regulated.
Absolutely.
Okay.
We're regulated. Many of the loans we make are covered under the Dodd-Frank regulations. Now, the fix and flip are not because they're business purpose, but again, because we're lending out the retirement savings of our private individual clients, we want to make sure that the person we're lending to has either experience, credibility, good credit, strong financial assets. I mean, we're looking at their history, and a credit report, even though we're not FICO based, because we don't lend based on a FICO score, I'll tell you right now. So we've made loans to people with 500 FICOs, but what we look at is the nature of the credit. So we turn down loans all the time. My underwriters will come into my office and say, this guy hasn't paid a bill in years. He's got all these 30-day lates, and we'll just no. Why would we think he's going to pay our monthly loan payment if he's not even paying his PG&E or his water bills or his other bills? But other people might have a low FICO because they have multiple foreclosures. Maybe they had a bankruptcy. Some people have unpaid medical bills that because they weren't insured and they've got a $100,000 bill that they can't pay, and it's sitting there on their credit, and it's taken 100 points off their FICO score. Are they at bad credit risk?
Maybe not.
I don't think so.
It depends on their situation, but for the most part, it doesn't automatically mean that they're bad.
Doesn't automatically mean. In fact, we did a home loan for an owner-occupied purchase for a couple who was making good money, but the husband had gone through a horrific medical situation 2 years prior and had multiple unpaid bills that totaled up to $500,000. This guy was never going to get bank financing, so we actually made him a 30-year loan, and it's a great loan. Our investors are very pleased.
And sometimes what happens too is a nasty divorce can affect things. Okay, tell you what, we're going to cut to a second commercial break. Now, last week, we did have a special trivia contest where the winner was going to get a 2-night stay at the South Coast Winery. So if you're looking for an ultimate wine country escape, experience South Coast Winery Resort and Spa in the heart of Southern California, Temecula Valley Wine Country. Enjoy a tasteful experience at this 39-acre luxury resort featuring a warm and friendly tasting room, award-winning restaurant, decadent three-story grape seed spa, and a retreat for the night in your own oversized private villa or suite. They have a fireplace, private patio, and vineyard view, and all of this and so much more await you at the South Coast Winery Resort and Spa. Relax and enjoy. Call 800-730-5042 or visit wineresort.com today. Now, here was the question. Almost 1/3 of young adults will wait less than 1 second before doing this. What?
I don't know.
I guess you have to be a young adult to understand this. Okay, the answer is bypass a slow walker. So you see someone walking slow, and for 1 second you go, boom, I'm done, and you walk right past them. And our winner was Angela from Fremont. Maybe she's a runner.
How did anybody guess that?
That's brilliant. That was a good one. Okay, so now here's our second commercial trivia question. Regular trivia question. Again, the theme is the color red. Which American First Lady was known for her preference for wearing red outfits, both for her daytime and evening attire? The first 3 callers with the correct answer to that question are going to win a free 3-day 2-night stay at the Lighthouse Resort. Call 888-912-1190. That's 888-912-1190 to answer this question. Which American First Lady was known for her preference for wearing red outfits, both for her daytime and evening attire? All right. Stay with us. You're listening to The Best of Investing with Edward Brown and Mark Hahn. We'll be right back.
Keep forgetting I should give out my number at the end of every segment. So.
Yeah. Sarah's been gone all week camping and for intercession. She's a good
Yeah,
kid.
don't call it intercourse.
No.
She's between courses. She's an I did that by mistake. With,
did
with,
you
with
really?
Kimberly's, yeah.
Oh, that's
Because they call
funny.
it intercession. I kept thinking you're taking an intercourse. Oh, wait a minute! I didn't just say that.
Dad, how could you? Oh, that's funny. I bet Lisa was going,
Yeah.
Yeah, so Sarah, how was your intercourse? Yeah. Okay, here we go. Well, welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hahn of Pacific Private Money. When we get to the second commercial break, we asked this trivia question. Which American First Lady was known for her preference for wearing red outfits, both for her daytime and evening attire?
I'm going to guess Nancy Reagan.
That is correct. Very good. Okay, so Mark, first of all, we've been forgetting to give out your information if people wanted to.
I know.
more
We've
about
had
you.
people call irate before going, you need to give out your number at the end of every segment. You're talking about investment opportunities,
Yeah, and I
et
had to
cetera."
listen to the whole show. You go, oh,
right.
there you go.
So, I mean, look, all you have to do is Google Pacific Private Money. We come up right on top. In fact, if you Google private money or private money loans, we're generally on page 1. But anyway, Pacific Private Money, we're in the Bay Area at 415-883-2150. That's 415-883-2150. Call and leave a message over the weekend if you want more information on trustee investing, mortgage investing. You want us to send you some information by email. We are not pushy salespeople. In fact, we have a friendly conversation. We shoot you stuff in the email, and we don't bug people when it comes to this.
You answer their questions, and if it works, great. If
Yeah,
not,
we're more into the belief of attraction rather than promotion. We've got references. We Google very nicely. There aren't bad things said about us out there in the airwaves and on the internet. We've got a good reputation, and our clients are very, very happy.
good. Tell you what, we did receive an email here from a listener, so let's just get right into
Sure.
this. Are fix and flips disappearing? If so, what kinds of loans are you focusing on?
So, most of us in the private money lending space, hard money lending space, whatever you want to call it, terms tend to be used interchangeably. Most of us were doing almost exclusively fix and flip and real estate investor financing in 2008, 9, 10, 11, even 12. That was the vast majority of our business. In fact, we'll talk about a little bit more before the end of the show, just how important a role private capital has played in the real estate investment, construction, and fix and flip environment. And the banks really have not been serving that. So
what happens is you'll make the loan and then get it ready for the borrower to go ahead and get conventional financing.
Well, that's or the borrower sells it
Or sells
to a buyer who will get bank financing,
Yeah.
because now you've got a turnkey, nicely renovated property. And in fact, that's what's happened to thousands and thousands of properties just here in the Bay Area. But that volume has gone down significantly in 2014 and now 2015. We're seeing far fewer applications from real estate investors who are looking to buy fix and flip. Now, that doesn't mean there aren't a lot of real estate investors out there looking for opportunities to buy fix and flip, but the number of opportunities have gone down dramatically, and that's impacted our loan volume. In really not in terms of the actual volume we're doing, because our volume is actually up year over year. It's been up for
But
the
the
last
nature's
5 years.
changed.
The nature of the borrowing has changed. So, and the reason for it is, quite frankly, Dodd-Frank. So Dodd-Frank went into effect a year ago in January, and the result of the new lending restrictions imposed by Dodd-Frank resulted in a lot of people not or no longer being bank financed.
Did you have anything to do with that regulation? Because they benefited you.
You know,
I wonder about that.
We are on the record. We've been doing this show, Edward, you and I, for almost 5 years now, and we have been railing against Dodd-Frank because as much as it's benefited my business personally, I'm just against it. I think the regulations were overreaching. It hurt people who shouldn't have been hurt. There are certain loans we can't make today for people who need the money and should be able to get the money. And we've talked about that in prior shows. But the silver lining for Pacific Private Money is that our loan volume is up. And so the decline of fix and flip loans, which have gone from, let's say, 80% to maybe 40% of our current volume, has been made up by the consumer loans that have increased. So now what's happening is a lot of people's real estate prices or values have gone up quite a bit, and so now they have a lot of equity, and they're looking for seconds. And some banks will still make home equity lines, but again, if you don't have the credit that they want to see, you have to look for the private source. So we do seconds, we do consumer loans, we're doing bridge loans. So there's just a lot of other opportunities.
Okay, you mentioned about seconds. Now, if most people who, let's say, have some experience with real estate, just they hear the word
before the turn of the market,
or just anything that you hear a second mortgage, oh, too risky. Now, what kind of seconds? How often do you make them? Give us an example.
So, we're not fans of people who appear to be equity stripping, is the term we use, their property. It may be their home, it may be investment property they own. And equity stripping, to us, the way we define it in private lending, is someone who's trying to get the maximum amount of cash out of their home. Now, of course, we said earlier we don't go above 70%. So that would mean if someone came to us with $1 million market value property and maybe they had a $500,000 first and they wanted to pull cash out, we wouldn't go beyond $700,000. So we might lend them $200,000. But we're not fans of that. We like to keep our seconds like below 60% loan to value. Now, it doesn't mean we won't do a loan up to 70%, because we have under certain situations, particularly when they're going to put the money into the house to remodel it and sell it.
Or if there's a very low interest rate on the first.
Yeah, right, exactly. So we've done that, but there are opportunities and applications that come our way for seconds that are behind a very low interest rate first that may have a fairly low relative percentage of the market price. So if it's $1 million home and they have a $200,000 first and they want to borrow $200,000 for whatever reason, we'd gladly make that loan because we're at a 40% loan to value exposure. We don't make them pay off the first because that first is at 3.25% or 4%, and we're not fans of making people borrow more than they need. So it's better for them. Maybe not better for us, but it's better for them.
It is because it's better for you from the standpoint that the cash flow for the borrower is eased up so that they can make your payments. And if worse comes to worse, usually you can get the first to back off, so that if you needed to do a foreclosure, you can just assume their loan or take it subject to.
Right. There are private lenders out there. There are brokers out there that will make the applicant pay off that first. They'll say, no, we will not make seconds. We do not make seconds. We will have to pay off your first. And as you just said, I don't know that that's necessarily healthy. Is it better for the lender or the investor in that note?
If you've got the money, you can always do that later on.
Yeah.
Right. And then if I remember correctly, you just add that to your loan.
That's right. That's right. So I wanted to get a little bit. There was an interview I read with someone else who is in the same space as we are at Pacific Private Money. They're in another state doing private money, and there was an interview of this person. I really enjoyed reading it. I liked some of the things this person had to say, and I just wanted to kind of parrot some of the concepts that they threw out, and it really had to do with hard money lending. What is it, and why is it misunderstood? And if you look historically, at hard money, it's probably created thousands and thousands of jobs. And just here in Northern California, we were talking about earlier how private capital through hard money loans was the catalyst for much of the economic and real estate recovery.
Yeah.
Real estate being one of the largest components of the economy. Banks weren't making loans to flippers. The private capital was making loans to flippers. You sent me an article this week that talked about how non-bank financing is a growing percentage of total real estate financing in the marketplace. Now, the article you happened to send me actually didn't include, interestingly enough, private lenders and hard money lenders, because they were really pointing out the growing companies like the internet-based lending companies and other publicly traded companies who provide data to these organizations that can then say, looking at the data, they can go, oh, as a percentage of total financing, non-bank financing is actually growing. Well, in the hard money realm and the private money realm, none of that data is available because we're all privately held companies. We're not public companies, and so we don't divulge the numbers, at least not to these organizations that collect the data. So it's actually bigger and more important than the public actually realizes. But it's interesting when you look at even though hard money and AKA private money lenders have been a very important part of the lending landscape. I can't tell you how many times I've been to like a real estate event where I'm meeting real estate brokers or realtors or other people who are on the conventional side.
Yeah.
They're representing home buyers, and they're used to representing home buyers who can get conventional financing. And when I tell them that I'm a hard money lender, they kind of look at me and they give me this face like like someone passed gas in the room or something like that. It's literally, it's almost the same look, and it's just it's so unfortunate because it's still there's a stigma, and it's really misunderstood because people think, oh, hard money, I would never recommend my client do that. That is just so so sleazy or scummy.
Okay, so then if that client can't get a bank loan, needs to close on the house that broker did, then let the broker give them the money.
Well, there's just a lack of understanding out there among some of those real estate professionals, both on the realtor side and the mortgage origination side, because they haven't had the experience of working with a company like Pacific Private Money, and there are actually dozens and dozens of companies in Northern California like Pacific Private Money who are reputable companies. Many of them, like us, are new since the market turned. We have a completely different business model, fast, friendly. Is it expensive? Yes, it's a plan B when plan A fails, but it's a very important opportunity and alternative for the consumers.
Okay, we're going to cut to our last commercial break. When we come back, do you have a deal of the week you can share with us?
Absolutely.
Okay, and then we'll give out your information again. All right, so first of all, next week we're going to have another special trivia contest where the winner will get an overnight stay at the Oceano Hotel and Spa in Half Moon Bay. So you can leave the stress of the city behind. You don't even have to leave the Bay Area and escape to the Oceano Hotel and Spa in beautiful Half Moon Bay Harbor is within reach. Enjoy gorgeous sunsets, fresh local seafood, and fun ocean adventures. And they've made it easy to get away with a special low weekday rate from April to June. 12,000 square feet of indoor and outdoor event space. Oceano Hotel and Spa is also Half Moon Bay's premier destination for meeting and special events. Check them out at 650-726-5400 or visit www.oceanohalfmoonbay.com. You can also follow on Facebook and Twitter. Okay, now that's next week. We're going to have a special contest for them. Now we're going to cut to our regular Lighthouse trivia question, third and final one, which the theme is the color red. What American novel that tells the trials let me try this again. What American novel tells the trials of a young soldier in the Civil War? All right? I never did read this book, but remember, the only book I ever read from cover to cover was Harold and the Purple Crayon. Okay, so yeah, that's right. Okay, so again, the theme is the color red. What American novel tells the trials of a young soldier in the Civil War? First three callers with the answer to that question are going to win a free 3-day, 2-night stay at the Lighthouse Resort. Call 888-912-1190. All right, stay with us. The Best of Investing. We'll be right back with some closing comments.
All right, I don't have to race out of here, so
no.
Unless they bump my flight earlier again.
What, did they bump it earlier?
No, well, it went from
date.
3:25 to 4:25 to 4:10.
Oh, that's weird.
They keep texting.
Yeah.
Do the math.
Do the math.
How much?
9:43.
Okay.
Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with Mark Hahn of Pacific Private Money. When we get to the third and final commercial break, we ask this trivia question. What American novel tells the trials of a young soldier in the Civil War?
I'm guessing it has the word red in it.
Yes.
Better red than dead.
Better dead than red is what you meant.
Better dead
Yeah,
than dead.
no, the Red Badge of Courage. You heard the name of it.
Yes.
Okay. All right, so Mark, give us a deal of the week.
Well, we've had a number of deals come in similar to one I'm going to share with you, and it kind of reflects and answers maybe the question, what kind of people come to you for, a loan at 10%? Who would pay 10% interest rate for a note? And we talked a little bit about, if you've been listening to the show from the beginning, there are a lot of reasons why people can't get bank financing, and when they can't, we're an alternative. We're Plan B when Plan A fails, and we try to make up for the fact that it is unfortunately expensive money by being at least fast, friendly, reliable. Reliable is another key. We get a lot of deals that have to close by next Friday. Bank financing fell out, and the person does not want to lose the opportunity to purchase this property, or maybe they've got a hard deposit. Maybe they put $25,000 or $50,000
Meaning a
down.
non-refundable deposit.
Yeah, non-refundable deposit. I mean, who wants to lose that kind of money? And it may actually be better for them in the long run to go to get a quick private money to close that transaction, and then get bank financing when you already own the property. So anyway, here's another example. So we get a call from a guy, and he has a friend that he's trying to help out, and this friend's parents both died. They died within 6 months of each other, and they owned their home in San Francisco. No debt on the property. Now, it's going through probate, and they're working with an attorney, but she wants to remodel the home and sell it. So she came to us asking if we'd be interested in doing $200,000 to $300,000 loan. It'd be a first position loan on a property that in San Francisco. So
what's the value?
once I got the address, the good news is that even a shack in San Francisco is worth nearly $1 million these days. But we got an appraisal on the property. It's worth $850,000 as is. I want to make sure. I said, hey, don't give me a future value. I want to know as is in its current condition.
Okay.
What's a distressed
And
value?
why couldn't you get bank financing?
Well, banks almost never do anything that has to do with probate or siblings, buying out siblings. Another loan request we got today was 3 siblings inherited property. One wanted to buy out the other 2. And banks are very specific. They don't like making loans to entities. They don't like making loans to trusts. And they don't like making loans to dead people. So, they want they'll make you a loan if the property is in your name. Or if you're the borrower, but when you're dealing with trust issues and probate issues, they're just not fond of it. And in fact, many of them are short-term loans in nature. They want to get a sibling off title, or they want to be able to remodel the property to sell. And oftentimes these are short-term, so the bank, they're going to apply for conventional financing after they get this one, part of the equation completed. So, and that's a growing percentage of deals. In fact, we've got an aging population, and there's a lot of situations out there where the parents have passed on, and they had a living trust, and now the property is in that trust, and the beneficiaries are their children. And very rarely do the siblings agree on what to do with the home. One person wants to keep it, and the others want to cash out. And so, so private financing is a great source.
So in a situation like that, property's worth $800,000 as is. You're making a $200,000 first. Your risk as the lender is very small.
It is, and in fact, if this person, the applicant, were very aggressive, we probably would have gone down as far as maybe 8 to 8.5% on the note rate. But since I knew it was going to be short term, I said, well, we kind of like a 9.5% rate on that, and they agreed to it. They didn't think that was outrageous given the nature of the size of the loan relative to the value of the property and
How many
the
points?
ease of. This one was a 3-point loan.
Wow.
So 3 points and 9.5% interest. It hasn't funded yet. We're still working on a couple of issues related to the probate that we're actually helping the client in this case. We had our title company and the title officer reach out to these guys and tell them exactly what they needed to do. They needed a little bit more paperwork done because the property is still in the name of the two deceased parents. It's not in the name of the estate yet or of the trust. So again, it's we're problem solvers in many ways. People call us, they've got a situation, and they tell us what the situation is, and we can generally, right on that phone call, tell them, can we help, whether we can help that person or not. And we can't always help everybody. In fact, I don't share this that often, but the ratio of yeses to I'm sorry, we can't help you, here's a number of someone who might be able to, it's pretty surprising to most people. We did the numbers for 2014, and we discovered that we were closing 1 out of 20 inquiries.
Wow.
1 out of 20 inquiries, and that's really at the phone call level. So how many of those actually got to receiving an application and then not closing or not funding or not being able to do the transaction afterwards? And that number came down to 1 out of 8. So it's still, again, we're I wouldn't say cherry picking, but we're particular about the kinds of loans we do. And in fact, here's a tip for someone who is interested in maybe borrowing privately or borrowing through a hard money lender, is that most people in our line of business specialize in a certain type of lending. So, for example, we tend not to do construction loans or rehab loans. We like just a clean loan, 70% loan to value or less. Now, what we do that other hard money lenders do not do is we do consumer loans and loans on a primary residence. And I'll tell you right now, 1 out of 20, only about 1 out of 20 hard money lenders or hard money brokers will say yes to a consumer loan. And the reason for that is there's extra licensing, there's extra legal work. It's harder to underwrite. Not everyone has employees working for them. We have 6 employees at Pacific Private Money. Sure. That's actually a pretty big company for private. There are not that many companies out there doing what we're doing that have employees, and the ones that don't have employees tend to restrict their funding to only business purpose or investment purpose loans.
Okay, before we forget, we give out your information for either people who want to borrow money from you or if people want to invest with you.
So go to pacificprivatemoney.com. From there, you can click a link and go over to our fund website, which if you want to go there directly, it's pacificmoneyfund.com. And so if you're driving, I don't expect you to be able to write this down, but it's pretty easy to remember Pacific Private Money. You can get to all of our various portals from there, or give us a call at 415-883-2150 and leave us a message. I always get back to my office on Mondays, and there's usually a whole smattering of messages that from people calling, I heard you talking about something or other.
Well, one of the things I like about your fund is that you can choose as an investor to either take the monthly distribution, which is now currently yielding what, a little over 8%?
Yeah, about 8.14.
Okay, and then if you don't need the money and you want to compound it, because you can let it ride, you get it what, about 8.5?
Close to it, yeah. I think those investors who've been with us since the beginning, the overall compounded yield to them now is close to 8.5.
Excellent. Mr. Smithers. As
We like
Homer
those
Simpson
numbers.
would say. Okay.
That's right.
That was Montgomery Burns, yes. Okay, thoughts for the day. We're going to cut out here. American songwriter Corky Siegel said, "Life is too important to take seriously." I like that.
Absolutely.
And American author and professor of biochemistry Isaac Asimov said, "The saddest aspect of life right now is that science gathers knowledge faster than society gathers wisdom." Very true. I think that would be a Confucius would say that too. Tune in next week to The Best of Investing. We're going to be giving away 9 more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. So long. Okay.
Cool.